Hey there, today we have a United States Marine Corps officer and multifamily real estate investor. For all our armed servicemen listening, this is an episode for you that you don't want to miss. All this and more coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Brian Brisoe. Brian is a multifamily real estate investor, co-founder of Four Oaks Capital, and the host of The Diary of an Apartment Investor. Brian, thank you so much for joining us on the show, and how you doing, my friend?
Hey, doing great. Thanks for having me. I appreciate this.
Absolutely. Really looking forward to it. And I kind of always start off kind of asking about kind of like, people's backstories and how they got started.
Yeah.
But for me, my biggest question, I was kind of thinking that, you have a long career in the Marines, and, most people, they kind of, go through this career and then they kind of look forward to retirement. Why real estate?
Yeah.
Why did you decide to get into that arena?
Real estate's always been something that I've been fascinated about. It's something that early on I could see a lot of potential. I have a couple degrees in math, and so the numbers behind it, made sense to me. I think I realized early on, probably like a high school math problem when, they started putting these word problems on the board. It's just like, that kind of makes sense. So mathematically, it made sense to me. And I started realizing, property values are continuing to go up. Mm-hmm. And, I realized the power of leverage. You can, for 20% down, just the fact that you can buy a, $200,000, property and only have to bring $30,000 or $40,000 to the table, and the bank brings the rest, that just naturally appealed to me. But, I was not planning on, when I was younger, I never planned on joining the Marine Corps. That just kind of happened. It was September 11th was really the trigger for that. So September 11th happened, and a couple of days later, I was in a recruiter's office, and, a couple weeks later on a plane to, the basic training that I went through. So,
wow.
While I was active duty, I just started picking up, a handful of single family properties. And my method was, hey, I'm moving every 2 to 3 years. So I might as well move someplace, buy something, and then when I move to the next place, keep it as a rental, let it keep appreciating, have somebody else pay down the mortgage. And if there's a difference between the mortgage and the rent, that comes into our pocket, So that was the model. And I did that successfully a couple of times. But I realized a lot later that it wasn't scaling as fast. I kind of had these, and here's the mathematician with, not doing the math. I understood the theoretical side of it. But I just had these grand ideas. I'm like, yeah, I'll buy a handful of properties, and, 10, 20 years from now, I'll be set for life, and a handful of properties doesn't set you for life, So I started looking at scaling and how to scale my single family property business. And as I was, studying out best ways to scale, came across multifamily, and it's been multifamily ever since. So that's a roundabout story of how I got into real estate and multifamily specifically. But it was just kind of a slow rolling train, and kept on picking up a little more steam along the way.
Mm-hmm. And as far as kind of like that transition into multifamily, I know a lot of people that are working professionals, or even in the Marines, or any type of service industry, and then heading into it. Can you kind of talk about kind of that educational path? I know you had, you're really skilled in like math. You can understand the numbers. You can really like understand that really well. But as far as kind of like heading into there, can you kind of talk about, did you go through like the traditional route of, just your experience through your single family, or did you go through like course and books that they're able to help you transition into that?
Yeah, great question. I think the education part is absolutely key to anybody who wants to get into the business. And at first, I thought my single family, credentials would carry me through, right? And I remember this was, probably just about 3 years ago, touring my first multifamily property, and I went through and I kind of looked at it with a broker. And I remember walking out of it, scratching my head thinking, how do I know this is a good deal? One of the properties that I had, the single family properties I had, never cash flowed. It was in San Diego. It's in a market that appreciated like crazy. I mean, we ended up with, 6-figure equity in a couple of years, but never cash flowed. And I remember walking out of this home thinking, how do I know this isn't going to be one of those? I want one of the other ones that cash flows. And that's when I first realized the importance of education. And oh, by the way, I had listened to, hundreds of episodes of various multifamily podcasts. And so I had a general idea, but walking out of there, I was just like, I don't even know if this is going to work. I don't know what renovations are going to cost, none of this. So that's when I realized I needed to focus my education. And I ended up going with, one of the big time, coaching programs. It started out with just an online course. I got the little small online course, and then I saw the value in it. I saw that, when you listen to podcasts, most people on the podcasts would talk about their coaching or their mentors. And I didn't have a big network of people who were already doing it. I didn't have a pool of people where I could reach out and try to find mentors. And so the quickest way to get that for me was just paying for it. So we ended up selling a couple of the single family homes, and it paid for the mentorship. It paid for basically a lot of the startup costs for running the business that we're running right now.
And as far as kind of know, like starting a business is tough, and especially like, coming in, not knowing anything from people that are listening. Can you kind of talk about like the experience that you got from, being in the Marines that helped you as far as kind of leadership and, training, all that stuff that translated into your investment business?
Yeah. I think one of the common threads in Marine training is, they try to make you realize that you're far more capable than you realize you are. And that's one of the things, physically, you're far more capable. You can always walk another step. It doesn't matter if you've gone 3 steps or, 3 million steps, you can always walk another step. But, that's one thing that really helped, that I knew that, buying a multifamily property it's a lot of work, and you have to know a whole lot. So I think one thing that I learned is I would be able to tackle it. I could figure it out, between military training and just, life experience. I knew that I'd be able to figure it out. And in a couple of ways, I really learned what not to do. I mean, the military is part of one of the very large, I'm not gonna say the biggest bureaucracy in the world, because I'm sure there's larger ones, but, things move at the speed of, it's just super slow. I mean, inside the military, if you're not like, actively in combat, I think combat's the only place where things move quickly, but everywhere else it's like slow as molasses. And so I did learn that, if you wanted to get things done, you've got to be fast. It's you go in kind of with the combat attitude and not the, at home training or waiting for stuff to happen attitude. But you have to be fast. You have to be quick. And you have to be faster than your competitors, or you're not gonna get the deals. So those are probably the biggest lessons that I brought into it. There's millions of them, but probably 2 biggest.
Yeah, I kind of like what you had said there as far as kind of like speed and being nimble, especially in the real estate business. It's, a lot of people are, wants to get in, and they're looking at deals, and they're flying and checking out different markets and things like that. Can you kind of talk about your investment criteria? What do you guys like? What markets you guys like? What unit size and things like that, things that you guys like to invest in?
Yeah, so where we're at now, I mean, we started, I think most people who start with, lower door counts and lower prices, because there is a barrier to entry to get in. Our markets haven't changed. So we like Southeast. I think on a national level, there's a couple of trends, and people are moving from high population areas to low population areas, or moving from high cost of living areas to low cost of living areas. And they're moving from cold areas to warm areas. Those are the 3 major trends that are happening in the U.S. And the Southeast is the recipient. I mean, they've got all three things going for them: low cost of living, low population density, and it's warm all year. So you've got a lot of people on the East Coast moving down. So the population is growing fast in the Southeast. The economy is growing. I mean, even under COVID, the economy is in some of the southeastern states, stable, where the rest of the country is going down.
Exactly.
Some cities it's actually growing, and some cities in the southeast, even with COVID, rents are still increasing, occupancies are still high, and collections are still high. So I think southeast is a strong region. Then within the southeast, so far we've been in the secondary markets, and if anybody doesn't know what that means, your primary markets are your large cities. Think your New Yorks, your Los Angeleses, your Chicagos, and such. Your Charlotte's probably a primary market in most people's books too. Your Charlotte's and Atlanta's, but so we're looking at the secondary markets, and those are the cities that have smaller population. Basically, I think our line in the sand, anything above, about 300,000 as far as the metro size is what we're looking at, 300,000 and up. But in general, we'd like to stay away from the bigger cities because there's a lot more competition and a bigger barrier to entry. I think as the company matures, we'll probably, get that's not a hard and fast thing. We'll probably get into the Atlantas, we'll probably get into the Charlottes eventually, but starting out, that was a bridge too far. We do like C-class value add. There's got to be some sort of component where we can come in and fix things and raise rents. And then hold times, we're typically looking at 4 to 6 year holds. But every property is a little different. There's a slightly different story, slightly different situation. But in general, yeah, Southeast, favorite areas are, Augusta, upstate South Carolina, and everything else.
Awesome. And can you kind of take us through kind of like, one of your favorite deals and, maybe kind of like the business plan, kind of give people an example of kind of like, the type of stuff that you like to tackle.
Yeah, there's one we closed on about 7 months ago. I can't remember right now if it was June or July, but we closed in the summer. It was a COVID closing, and it was the closing was actually delayed, several months because of COVID. But it was an 80 unit. It still is an 80 unit apartment building, and we got it at a really good deal. And my partner Eric is, an amazing negotiator. It was one of these cases where he was actually able to sit down with the seller over lunch a couple of times. So the negotiations were over lunch with the seller and with a representative from the brokerage present. So they were able to talk through the whole thing, and we realized that the seller wanted to do a 1031 exchange on the back end. So we came up with as flexible an arrangement as possible to allow him to be able to do the 1031. If you don't know anything about a 1031, once you sell the property that you're going to do the exchange with, you're on the clock. You have 45 days to basically identify the next property, and that's not a lot of time. So what we did is we arranged a master lease option with him. We said, hey, we're going to, as of X date, we'll take over control of the property. It'll be a master lease. We will pay you this much. And as soon as you find the property that you want a 1031 it into, we will execute a sales contract. So we had a lease option, lease with an option to purchase contract built up. And that's how we got that deal. But, what was really nice about it is we got a great price. We started negotiating the terms of the contract, and as most multifamily deals go, there's several iterations of the contract. Lawyers get in with their red pens, which I think every red pen in the world should be thrown away, to be honest with you. But the seller eventually came to us and said, I found the property, and we were like days away from signing the lease option contract. He said, I found the property. What price do I have to give you for you to buy it right now? And so, we asked for $100,000 off of our, already agreed to price. And so we got the property for $2.4 million, which is about $30,000 a door, just outside of Greenville, South Carolina, which is like an unheard of number.
Wow. Yeah, that was really good.
Yeah. The property appraised for a lot more. And end of the day, it's 80 units. When we purchased it, 72 units were occupiable. There were 8 units that were torn down to the studs. And so there was obviously meat on the bone. Rents were, in some of the units, rents were quite a bit below the market average. So since we've owned it, we have brought 4 of the 6 units back online. We've been a little bit slower with that process than we wanted, but we've got 4 of the 8 units back online with tenants in it. And we've actually been able to, raise average rents significantly. And there was no water, there was centralized water billing. So we were able to bill back the water to the tenants. So we are basically almost at our 3-year projections for our rent bumps at the 6-month mark.
Wow.
So yeah, that's my favorite deal. We've closed on 7 now, but that's definitely my favorite one.
Awesome. Yeah. I mean, it's just, like where we get all that meat on the bone there. And because like sometimes when you're buying from a seller, they don't either have the energy to do it. They don't know how to maximize that. And you guys are able to come through, implement your business plan, and just really take it to the next level. That's really awesome to hear. And of course, we'll be, have you back on the show to talk about the other deals and stuff. We do a lot of case study podcast shows as well. But I just wanted to quickly get your thoughts on, as moving forward, you guys, of course, purchased property during COVID, have been able to perform well. But where do you kind of see heading forward with you guys as far as activity goes, heading into 2021 as far as like new acquisitions and things like that?
We're still acquiring. We were underwriting conservatively. Everyone says that, but if you look at, the proof's in the pudding on this property right now, 6 months in, we are at our 3-year projections on what's going on. That's because we underwrote conservatively. We underwrote a 25% vacancy rate, including, physical economic vacancy for the entire first year on this property. Right. So, I think if it works with our conservative, almost worst case scenario underwriting, we'll absolutely purchase. And, if you look at trends, I mentioned the trends earlier. I think COVID has accelerated a lot of these trends, especially from the high population density areas. Your New York's, every time you hear a multifamily report on New York, it's, record vacancies. And that's because people are moving out of the cities. They're moving to places where there's more room. And with teleworking, people all across the nation are teleworking now. And all of a sudden, you don't have to live in New York City to have a New York City job. And that's changed the marketplace. So now you can live in the Carolinas, you can live in Florida, you can live in Georgia, you can live, wherever you want, and telework into your big city jobs. And that's accelerating from high cost of living to low cost of living areas. You're going to get the same salary, but your dollar is going to go a lot further, away from the cities. So we're still acquiring. Number one, we believe in the strength of the market. And if you look at the election results as well, Biden has promised more help, more subsidies to the people. And Democrats won Congress, both houses of the Congress. So we're expecting, more government aid to come out, which should help basically bridge the gap until the economy is back up to full steam. So, end of the day, we're still bullish on the Southeast, especially. I think if you're looking at multifamily, right now, there's areas you want to avoid. But the areas that you want to avoid right now are probably areas where you're going to have screaming deals, a year or two from now.
Exactly. Yeah, a lot of times we're probably having this conversation a year ago. People wasn't really saying that. They wanted to kind of stick in these highly densely populated areas and say that is the trend for the future. Yeah. But definitely those keys there is now looking at these secondary and tertiary markets is definitely now on the radar now. And you guys saw that trend and started taking action on it. Can you guys tell us about your podcast? I understand you guys have a podcast as well. What do you guys talk about it, and when do you guys release episodes?
So we release 3 episodes a week, and it's called Diary of an Apartment Investor, and it's a very unique format. Two of the three episodes are what we call the Ask the Expert episodes. I'll bring on two guests on every episode. I'll bring on an aspiring investor, somebody who wants to get into the apartment business, and I'll bring on somebody who is well on their way in the apartment business. We'll talk with each of them about their stories individually, but basically the last half of the episode, I basically turn the mic over to the aspiring investor and say, you got questions, ask. And the aspiring investor can ask the experienced investor the questions they have, and for me, it's awesome because I get to help people who are trying to bootstrap their way up into the business. But I also get to learn from some of the guys who've been doing this for many years. Like this morning I interviewed Michael Becker. He's got 6,000 units, $1 billion in assets under management. And I was writing down. I was learning stuff as the aspiring investor was asking questions. So it's been great for me personally and for our brand as well. It's something that a lot of the aspiring investors, a lot of people that listen to the multifamily podcast really relate to, because if it's not this episode, it's the next episode. They'll find somebody that looks and thinks like them and ask the same questions that they have.
Yeah, that's a really cool format, because like I said, a lot of times you just have this kind of like mine where we just bring on guest experts and we just kind of pick their brain, but it's pretty cool with the element of bringing a new inspiring investor and they actually get to talk. So the question elements will be actually even more intriguing, because it's like they're gonna want to take something actionable that's relating to them in that specific moment. So that's really cool. I like that a lot. Yeah. And I just kind of learn a little bit more about you. I know that you're, in the Marines and served for years. But can you kind of take us through a typical workday for you? And do you have any special morning routines?
So my morning routine, I wish it was better. I was doing the Hal Elrod Miracle Morning for the longest time, and my schedule changed a lot. So right now I've just started redoing a different routine. Just get up in the morning. I've got a rowing machine right there. I've got a couple kettlebells right there. I've got a bunch of dumbbells in the next room. So morning routine usually involves 20 to 30 minutes of exercising of some sort. If I've got more time, I'll spend more. Planning my day, I've got high performance planner right next to me that I do every morning. And then my day, I'm still active duty. I'm stationed at the Pentagon, and so 2 days a week I'm physically at the Pentagon, and 3 days a week I'm teleworking. So the days that I'm home teleworking, it's a mix of Four Oaks and U.S. Marine Corps stuff. Fortunately, my job at the Pentagon is much less demanding now with COVID. I work international relations, and a lot of the types of stuff that keep me busy in a non-COVID environment aren't happening. So a lot of the international visits, a lot of the exercises that we have to support and plan for just aren't happening. So it's been a blessing for me. I mean, I'm not saying COVID's a blessing, but what it's done for me is it's freed up my time to be able to pursue multifamily a little bit more. So I've got my work laptop right next to me, and I'm on my personal / work laptop or home laptop. And so my work day is spent between the two. So I'll do as much as I can over there, come to a nice stopping point, and then throughout the day record podcasts or write blog articles or have calls with investors.
Awesome. And as far as kind of like working with your team and any kind of tools and resources, electronically or physically, that you guys use to make you more productive?
We're super high tech. Email and text is usually what we do the most, and Zoom. We were using Zoom for the last 2 years. So that's really what we do as far as that goes. We haven't gotten into the high tech systems that we tried a couple of them, and we always end up reverting back to Google Drive and emails and texts. So we do use we have a investor management software we use. We have the the CRM, and I forgot what CRM stands for, customer relations software. Anyway, where we can build the emails and such. So we do have a couple of tools we use, but internal communication, text, phone calls, and email.
Awesome. And as far as kind of, and I know that this is really important to me, that I do all the time, I'm pretty sure you think about it as well, is gratitude. So what can you say that you're most grateful for?
I'm most grateful for my family. I'm also a very religious guy, so I'm thankful for God and all He's done for me. And I like to express gratitude as much as I can. But those are foremost in my mind.
Awesome. And how do we get in contact with you?
We've got two websites. Four Oaks Capital, more designed to people who want to invest with us. So fouroakscapital.com, and the podcast website, diaryofanappartmentinvestor.com. And, both of them have, capture tools where you can, the Four Oaks site has a schedule a call tool. So if you want to schedule a call with one of us, you head to the Four Oaks website and schedule a call with us. Email address, if you want to call me or email me directly, Brian Brisoe at fouroakscapital.com.
Awesome. We'll make sure to have all that on the show notes. Everyone who's interested, please check the links, reach out to Brian and his team, and kind of learn more about the process as well as the podcast as well. Brian, I really appreciate you taking the time with us. I know you have a very busy schedule and you're doing a lot of big things, and congratulations on the success. Happy and good New Year to you and the family, and we look forward to talking to you again soon.
All right. Hey, thanks a lot. I'd love to anytime.
Absolutely. Thank you. Take care, my friend. Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to passiveinvestorsclub.com/join. Joining the club is completely free and there's no obligation. And all our members receive our free Passive Investors course along with tons of resources and content. So again, passiveinvestorsclub.com/join.